All right, guys, I am back again with the Ichimoku Weekly Weather Report for the week of January 31st. So we will be discussing all of the forex pairs pretty much and looking at trade setups, trade opportunities using Ichimoku. We hit a little bit on the time analysis this week. Also hit that when we were talking about our crypto session. But guys, just want to be able to show you some trade setups, some trade opportunities, and some levels in the market where possibly you could catch some trades using Ichimoku. So hopefully this is helping you guys out. If it's helping you guys, please do give me a like on the video. And also don't forget to subscribe to this channel, because what you will get is an opportunity to see this on a weekly basis. And then finally hit your notifications so that you will be notified when I am placing another video, which comes every week for the Forex market. But also, guys, I would like to do this live. So hopefully we can get to a point where we're doing this weekly on a live basis. So this is for you guys. Hope you enjoy it. Let's get to it. All right, guys, before I get started, please make sure you do see and read and understand my disclosure statement. Please know that I am not an investment advisor. I am just an educator doing this for educational purposes only. So if you decide to take upon yourself to go ahead and do anything that I am showing you in any of these videos, please do consult with your own financial advisor so they can help you to assess the relevant risk associated with trading the Forex market. All right, guys, so before I get started, as usual, I always want to give you a word from the Lord. And today's word comes from Luke chapter 6, verse 41 through 42, which Jesus said, "And why worry about a speck in your friend's eye when you have a log in your own? How can you think of saying, 'Friend, let me help you get rid of that speck in your eye,' when you can't see past the log in your own eye? Hypocrite, first get rid of the log in your own eye, then you will see well enough to deal with the speck in your friend's eye." The problem with sin and forgiveness, with inconsistency, with questionable motives, and with unjust criticism is not with someone else. We must look inward at ourselves. We must look critically at ourselves. We must look correctively at ourselves. God holds us responsible for ourselves. Jesus wants us to see that our primary job is to deal with our own problems, our own sins, our own weaknesses, mistakes, inconsistencies, wrong motives, or whatever else it may be. Only after we've begun to address these problems in our own life can we begin to help others address the sin in their lives. And even then, we must approach them with humility, love, and grace, knowing that I am a sinner saved by grace. God bless. All right, guys, so I'm ready to get started here with these charts. So what we're looking at is the Aussie CAD daily time frame. We're going to use two time frames. We probably won't use the monthly. We'll just go to the weekly, but let's look at this thing real quick. So let's go to the weekly really quickly. So you could see the weekly is very strong to the downside still. It doesn't look like it's going to slow down here. But the thing that I do see that kind of gets me to thinking, let me move this up. Move that there. Is like when we look at this chart, you could see the market still moving to the downside, but we see some divergence. Well, maybe not at that point. Might be pretty close to the same. So we don't really have divergence. We had divergence coming in here. All right. And the market didn't really seem to push up at all. So I'm not really concerned with the divergence since I don't really see it on the chart that much. So let's look at the waves of this last leg here, and then let's measure some things. So when we look at this wave, you could see the wave, and I'm going to show you the wave. So this is an N wave. So here's an I wave. Another I wave added makes a V wave. And then another I wave added to the V wave makes this N wave. We're always shooting for the target of this. So it's like 1, 2, 3, and then 4. We're always shooting for 4. So when we're up here at 3, we're still bearish. So we're still thinking the market would drop. So once we realize where the 3 level is, then we can start to focus on where our 4 level could be. The way we're going to figure out our 4 level is the way that I always tell you. All right. So what we're going to do, I can figure out all levels of Ichimoku. Ichimoku has, 4 main levels that we would be concerned with. It would be the NT level. All right. It would be the N level. It would be the V level, the E level. Sorry, not the V level. It would be the V level in here, and then the E level. So the V level would be here, and then the E level. All right. So that's what we would be shooting for, those 4 values. This would be the furthest value most of the time, always. This would be the normal value that we shoot for. This value is so close to N sometime that I don't even mark it. And this value is so close to the level 2 right here that I don't even mark it. Level 2 would be 1, 2, 3, and then 4. So I usually don't mark the NT because it's so close to this level. So I get that. And then this V level is so close to this N level. All right. So how do I know what these levels, how to find those levels and so forth? All right. So when we use, what we're going to do is measure from, the way you have to find that level is in a bearish market, you measure from 1 to 2 to 3. You have to be sure that 3 has developed. So after you get these 2 candles, you may start to realize, definitely here, you know it's a 3 level because you already have the development of the leg, the third extension of the leg, all right, for your N wave. All right, so then you can start to calculate your values. What I'm going to use, I only want to find the N value right now. I'm only going to be concerned about the N value moving forward and throughout for now. So what I use is this tool right here, trend-based fib extension. I put it on 1 and I take it to 2 and then I snap it on 3, and that's the N. The high of 1, the low of 2, and then the high of 3 to find 4. N value is going to be this level right here, this 1, which it's a 1-to-1 measured move. If you could look that up and find out what a 1-to-1 measured move is, but I'm going to explain it really quickly. I do this every week, explain this to you. It's this leg right here. Actually, let's use this tool because it'll stay with us. We can take this tool and say this leg, all right, we measured that leg to be 364.3 pips. Which leg again am I talking about? From 1 to 2 down here. So from 1 to 2, that's leg 1. This would be leg 2. And this is leg 3, leg formation for an N wave. But you have 4 points on the N pattern. You have 0.1, 0.2, 0.3, and 0.4. 0.4 is what we always would be looking for, right? So then if I want to know my levels, then I really want to know that N value, the main one, for sure. All right, so once I can figure that out, then I can calculate where the market may move. Then I could get into some time analysis and so forth, but let's show you this real quick. So if we say from 0.1 to 0.2 is 364.3 pips, now what we're saying is 0.2, 0.3 to 0.4 is going to be 364.3 pips. It's not going to be exact, but that's going to be the area that we're going to shoot for. So all we really have to do to find that value is take this leg I just showed you and take it over to 3 and see where it drops right to the 1-to-1 level. 100%. 100% of that leg. So what did we have here? Let's see what we had here. So when we talk Ichimoku and we go to our analysis, let's do this. So from here to here was 5 bars. From here to here, 4 bars. We could see another day of downward movement. That's the high. And then adding all these bars together would give us 13 bars. None of these are Ichimoku numbers, okay? Let me see one more thing here. Let's look at some things real quick. Let's see from point to point what we got. So we have 9 bars. That's the Ichimoku number. From this high to this high, we had 7 bars. All right, now let's go to from the lows. From this low to this low, we had 8. Whoops. We had 8 bars. Actually, we had 8 bars because this doesn't count the first bar. So 1, 2, 3, 4, 5, 6, 7, 8. So here where it says 9, we have 10 bars. So really, so in Ichimoku, give or take 1 plus or minus 1 to 2 days. So this 7 would be close to 9. The 10 would be close to 9. All right. So then we're going to measure the next bottom here. It's 7. All right. We're going to measure the next bottom. It's 8 bars right there. Okay. So the Ichimoku number would be 9, and we would be right on target. Well, actually, this doesn't count. So we are on 9 again. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Now, we're not supposed to be double counting these numbers, but we can give or take 1 or 2 days. So if I don't want to double count, I would put this here, and then I would move this number to there. That's how I would change that. But anyway, you can see what I'm pointing at. So we got 7 days, 7 days, 8 days, basically 8 days, 8 days, 9 days. So we're thinking 9 to 10 days, we can see a correction because that's an Ichimoku number. Kiansuchi is the Ichimoku values, Ichimoku numerical values, okay? So here's the numbers. I'm not going to go into this deeply today because it'll spend a lot of time on this. But I take my fib time zone, right? And the way I use it is, so I'm going to put it at this high and I move it over 1 and then I move it back 1 to get the numbers. So here's all your Ichimoku numbers, all right? And you can see them all on the chart. 1, 9, 17, 26, 33, 42, 51, 65, 76, 129, 172, all right? So those are your Ichimoku numbers right there that you would be using to find if you're using your time analysis. Now, see that I have this on this chart already at this high. So look what happened at day 9, all right? So we had a change, all right? So Henka B is going to be like, what we're talking about is going to be a change in the market, an acceleration or turn or whatever, right? To see that the market changed, accelerated or reversed. So we had this high to this point was 9 periods. It gave us an Ichimoku number. We had deceleration. It accelerated to the downside. And then at 17, which is another Ichimoku number, we had a drop again. All right. So the market dropped again at 26. Your Ichimoku number, we had a rise. All right. At 33, we had another rise in the market. All right. And then at 42, we had a rise in the market. It started the day before, but give or take 1 or 2 days. All right. Basically, give or take 1 day when you're looking at this time analysis as could be. So then the market moved higher. We're expecting the market maybe one more day before we see possibly a correction. So given one more day, we could end up on day 51, quite possibly on the day that the market starts to correct itself. Because if we get another down day, that will be what will be 40, will be day 50, and then another move higher will be candle 51. So we're thinking maybe that we see a low on day 51. I'm not thinking we see a high on 51, that's for sure, because we're only 1 day away from that. So maybe day 51 takes us to, maybe we see a low developed on February, what's that? February 7th. Oh, I'm on the weekly chart. Sorry. I'm thinking daily chart. So another week, we could see some more downside. All right. So with the downside, I was thinking I've got on back on the daily time frame. I'm stuck on that daily. But we wanted to get the analysis off of the weekly. So we're getting the bias. So we are very bearish. All right. And you can see I want to do the analysis on the daily time frame, more so on the weekly as far as the my Ichimoku numbers, but you could see what I'm thinking of. So that would be 51 weeks that we see. So the market could drop another week before we see a big correction back. So that would take us to, we set off of the weekly time frame, that would take us to the 7th. Let's mark this just to see where we are. Then we'll go back to the daily. But as I was showing you, like the formation, so we had, this is 8 weeks in between. All right, another 8 weeks in between, and then 9 weeks in between. So at 9, we do expect the market to push back up. It could be 10 weeks, which would take us down to this area. All right, and then you could see the highs that we were looking at. So we had a 9-week high, and an 8-week high, and a 10-week high, because this doesn't count the first bar. All right, so we had an 8-week high and a 10-week high. So we're one, give or plus minus 1 day gives us that 8, which would be close to 9, the next day for 9, and then 10, which would be 1 above 9. So then we're right at the Ichimoku values, we could say. So time analysis, that's how we're figuring out. We see our N waves. We're thinking the market moves down to this level. Now, if we had an E wave on here, let's see where it would be. I'm going to show you how I can find an E wave without too much trouble. Because we're saying that the market could drop another week, we could see some downside on the bigger term. So before we were going to see a good move back to the upside, let's figure out where our value could be. So again, let me mark these so you could see what I'm doing. 0.1, 0.2, 0.3, and then we're already at 0.4 because we have a 1-to-1, right? So what I'm going to do is take this tool again. I'm going to take this tool, and we're going to measure from this leg down to this point. All right. I'm putting all the values on, sorry. Whoops. So this would be already marked automatic, so we don't need to mark. This is already marked. So let's mark this other value, which would be NT, and it's right. We're not even going to mark NT because it's so close. NT value is going to be like right here. It's not going to be anything. So I'm not going to mark that. But I have the other values on here. So here's our E value. This would be the furthest value. And then here's our V value. All right. And then here we have our N value here. So now let's go to the daily time frame. Let's remove this. We're right at this value already for the weekly. So we know we're right at that level. So let's go to the the daily time frame. So on the daily time frame, here's the levels where we're looking at the market come to. I don't think so. Maybe another week we could see the market drop down to this value here, which would be our V value. So it's quite possible that we could see the market drop that low. All right. Um, all right. So let's get back. Let's get going. Let me take these off. We don't need these on. So now looking at this Aussie CAD, we have nice angulation on the daily time frame. And again, my daily time frame is going to mark the same as what I showed you on the weekly. Let me show you real quick. We could use this. We could go here. We could go there, and we could go there. And then you would see the values pretty much. All right. That lines right up with that value that we had off the weekly. That's going to line up because we're using the same leg, right? So we're thinking that the market we're going to see some more downside on the market. So, but being where we hit, there's a possibility that on the daily time frame, we could see a correction and then the market push back down. Where would it correct to? Where would we look to be taking a trade? Quite possibly, because I'm not going to trade against the trend. It's a bearish trend, right? So I'm going to look to take a trade if the market pushes back up to this level at about 90350, right? So that's it. So what we're saying, basically, the market could continue doing, because I'll show you the smaller moves here on the daily. So we're pushing like this, and we're thinking we could see that and then drop some more. Okay, so that's what we're looking at. But right now, I wouldn't take a trade on this. I wouldn't trade it right now because I'm not at any of my levels to make a trade. So for me to trade, I need to be at one of my levels. Also, this level here that we marked, the 1-to-1, it's a very good level to show support, because a lot of times, our resistance, depending, a lot of times the market moves in that measured move. Okay, so when we look back at this time analysis again, let's do it like this. Let's just look at these highs and lows. We're going to mark these. So when we go from this high to this high, we had 34. All right, 1 day off of each, actually it's 34 on the nose because it doesn't count the first one. I keep forgetting. And then we're going to go from this high to this one. All right, 44. It's actually 42. So we're quite off. We're off a little bit off of this Ichimoku number. All right, but not much. We're pretty close. And then we're going to go, let's mark these bottoms. We're trying to figure out where the bottom could occur. So this is actually 35. So we're 2 days off of an Ichimoku number. You could see the numbers. 2 days off of Kian Suchi. Let's go to this low, the extreme low, which is the lowest point right here. So 40 bars, it's actually 41. So 42 is an Ichimoku number. All right. And so let's go to the next. From this point to where we are now is 39, 40 bars. So what we could be thinking is 2 more days dropping down, 1 or 2 days of the market dropping a little bit, or maybe flattening out before we see a move to the upside. All right. So like we're thinking on day 42, because you're on day 40 right now. So 2 more days, maybe day 42, we see a correction, which would give us a move pushing back up to this level. All right. So that's my time analysis in a nutshell. All right. And that's the simple, easy aspect of it. I could get much more complicated than that. I can start doing all types of analysis where I'm thinking about, looking at equal values and so forth. But what we're looking at is just seeing if we reach a high or a bottom on an Ichimoku number, on a Kian Suchi. All right. So that would be these numbers here. And therefore we are actually 2 days away from a Kian Suchi. all right, which would be an Ichimoku number. And then possibly Hinkabi, which we would see a move. Hinkabi is going to be change of direction, acceleration, or so forth. So quite possibly we see that on day 42, all right, give or take a day. All right, so that's the analysis for Aussie CAD. Hopefully that helped you out. This is going to be Aussie Swiss franc. We're going to look at the weekly real quick. Weekly chart. Push, leg, push, and we're flat here. All right. Leg up, down, push back up. Might be seeing some divergence, maybe. Let's see. Not really yet. Unless we reach back down to this level. Let's mark this as a level. Possible support. Let's see if it measures with anything in the past. Yes, good level there. And that's it. So we're looking at maybe the market pushing down to this level, because look at where we hit, where we were. So we came back down to this point, and this would have been a zone. So what I like to do is mark these. This would be a weekly, make it a big zone if I use it as a weekly. But we're saying the market could come down into this zone, push down into this zone before we quite possibly see a correction. All right, so I'm not going to do time analysis on this. Let's do the easy, quick time analysis. So let's go to the high, and we'll use time analysis on that. So we'll go to this. We're going to use this high right here. And the reason I'm using this high right here is because that was a high, but this was the day of change on a high, on a pivot. All right, so you could see what's happening here. And it's really not lining up with any numbers per se. Now, as you see on day 9, we did accelerate to the downside. Day 17, we also did. Day 26, we dropped to the downside. Day 33, we did drop to the downside. And then day 42, we had a move back to the downside. So it did line up. We didn't hit highs and lows perfectly. All right, but we did accelerate on those days. All right, this day we dropped. This day we dropped to the downside after an increase, and then we dropped. So then we had a drop here after this correction. So what we had here was, you could see this. This was the high. And then the market dropped down here, not an Ichimoku number, but came up to this, not to here, which was an Ichimoku number, 42. This was 33. And at 42, we had a drop. We're thinking we drop. Maybe we see the market push into 52, 51 on this case. If we're thinking that, let's see if we could figure out where the values would be. All right. This is why it takes forever to take you forever to do time analysis and everything else all at once and try to do a video of all these pairs, because you'll be here quite a while. And that's why I don't do it. So I can figure out where these levels will be. I'm going to just figure out where. I'm just going to put the N value on the chart. All right, because that's the main one we use. So use your trend base fib extension tool, and I'm going to show you what your settings need to be. Actually, hold on. Are we right on the high? This is the high that we want to be from when we're doing this. We want to be at this extreme, to this point, to the high here. Now, where was that high? So I could see it. We're on that high. We want to be to the highest point right here. All right, and then we can move this back to here. So maybe push down to 51. We get into this level, 51 days, or, maybe it'll be about 50 before, like maybe 51, we see a correction. So a couple more days of downward movement here, quite possibly, because we just started this leg, and that would give us a push to this end value down here. So the end value is way down here. So it would be 51 days to get to that value, but I believe we're going to have something happen here, quite possibly at this support level. We'd have to wait and see, but if something happens at this level, then maybe we push back up and drop at 51. All right, so I'm not sure if it'll be a high or a low at this point, but looking at this, the way it looks, I'm thinking 51 could be a low here, or we could push down to this point and then see the move higher. All right, now if we drop down and then push right back up, we could create a high at 51 and then see the market drop to the downside, and then probably push down to this end value down here. All right, but I still see a lot of downside here. Let's go to the daily. Could take this off. Take this off. Take that off. Let's go to the daily. So looking at the daily, do I see a better end wave? I see the same wave, but you could see it a little bit better. It's the same wave, but we're coming here, and then we reach in this point, and then we maybe drop here, or maybe down to that end value. Now I deleted the end value, so I need to put it back. We want to see that end value. So it would be here, here, and then here. I want to put that end value back because this is a level where we're going to look for the market to move to. So overall, what we're saying is the market could push down to this level at about 61,535 overall. All right. Some people get what I'm saying mixed up with like the market's going to go straight there and then that's going to be it. Boom. No, we could see the market drop down to here, maybe push back up a small leg because this was a push up right here, right? And then a push down, a small push up. And so then we could see the market push. I'm looking at the overall picture of where the market could be dropping down to or where we could find support and resistance. So I don't trade anything unless I'm at my level. So therefore, there's no trade set up for me here. All right. And it's like fishing. All right. You just wait for a fish to bite. You wait for a trade to bite. There's no trade. You can't do anything except get your bait eaten up. All right. And if your bait is going to be your capital, you get that all eaten up because you're trying to catch a fish when there's no fish out there at this point. You just need to wait for that big fish to bite. So here we have this push. We could see this push down a little bit more, but now on the daily time frame, we're pretty flat. We're flat with Kijun-sen, flat with Tenkan-sen, pushing to this level. So if we remain flat and pushing to this level, we're probably going to see the market push back up off of that level. You don't want to see Tenkan-sen, Kijun-sen remain flat as the market drops because eventually something's got to give. It's going to correct itself, okay? So that's what I see with Aussie Swiss franc. Let's go to Aussie Yen. Let's go to the weekly. I don't know why this keeps coming off auto for me, but I put this level here. This is going to be a trend line off of the weekly time frame, a lower trend line, because we're almost setting up to be like basically a looking at that high here, and then maybe this low. If we keep following that low, we're setting up to be an ascending triangle pattern. All right, quite possibly. So that's what I'm looking at there on the weekly time frame. There's really no true, because we're trying to get into a P wave. If this market doesn't drop back down, this would form a P wave right here. The lower like that would form a P wave instead of a ascending triangle pattern. This would be ascending triangle pattern. But if we don't come to these lows, then we're going to probably form this P wave formation. Then we could see it break out to the upside quite possibly. Now, the way this formed, P waves at tops and bottoms usually see the market move to the opposite direction. This would be a top, but it dropped and then came back and created the P wave. So I'm not sure which direction we would see, but we just watch for the breakout of that level. All right, I can't really tell you which way the market's going to break out, and there's no given that it's going to follow, that what I say. So let's go to the daily. Daily here, you can see the level. So if we don't reach back to this level, but we're thinking the market could push to this level, we're fluctuation in here. We are trending down, trending up, trending down, but we're kind of in this fluctuation pattern, which is this triangle pattern. All right, so if we're going to follow the levels, then the market should drop down to this point. At this point, I don't have any trades set up, right? Because I don't have a level. I'm pushing to a level. Now, my level where I would set up a trade would be my fractal, but we're right in a big, long fractal. So therefore, I'm not really high on catching anything here. I want to wait. We're flat on our spans and we have too many crossovers. That tells you you're in some kind of a pattern, right? You don't want to see all these crossovers. You got Kumo twist there, Kumo twist here, and then you don't know what's happening here. When you got all those cross twists right there, then you know the market is flat or in some kind of pattern. All right. So therefore, that's what you have. And sometimes it's better to stay out of the market and wait for it to come to your levels. This would be a level I think about trading. Basically, if I'm trading Ichimoku, I probably wouldn't trade it because it'll be below the cloud more than likely. But if I'm just looking at chart patterns, then this would be a level where I look to trade. I would trade here to the downside. I would trade here to the upside. If it breaks this level, I would wait for it to correct to this level. Then I would trade to the downside because I'm always going to trade support and resistance the same. If it breaks to the upside, I'll wait for it to correct here. And then I'll trade at this point and I'll look for my long trade. I'll never go long here. I'll never go short here. I'll always wait for the market to make this support. Wait for the market to make this support resistance. Then I'll trade it to the downside. As long as it's support as it is, I'm going to trade it to the upside. Same thing here. As long as this level is resistance, I'll never trade it to the upside. All right, I'll always trade it to the downside. But when the market breaks and corrects and does this, the level now becomes support. I'll never trade it to the downside. I'll always trade it to the upside. Okay, so that's what you're looking at there. So I don't really have anything. We are trending down. We also could say, like, we could be pushing a leg. If we're going to push this leg, if the market is going to break out of this, then it would break out. My 1-to-1 is way down here. Then that would take me down to this 76.88. But we'd have to violate this level, which would be also this 2 level. So let's put a straight level there. Because if we can close below this 2 level, all right, then we could see the push towards 76.88.7. All right, but if we can't break 2, then we're going to find support in this area and quite possibly see the market push higher. What you want to wait and look for is how far are you going to be? What's Tinkinson Keeson going to look like at that point? How far away are you going to be at that point? If you're like this, see this? So when we go back here, if you've got distance like this, then you know the market's probably going to correct itself. All right, so you could see this distance. We're far away from it, from Kijinsen, and these are too far apart, and the market drops. If you get distance and Kijinsen stays up here while Tinkinson continues to drop, but the market's down here, then you're probably going to see a correction. All right, and the market push off of this support and resistance level. Those are the types of things you'll look for with Ichimoku. All right, that will help you to realize if you may be like, and I don't really pay attention to that either unless it's at a support and resistance level. All right, I don't just come flat out and do that. Let me see if there's a good spot where I could show you that. Not a real good spot on this chart, really, where I had some very good distance. At this point, here's the best one we had lately. So the same thing applies to what I just said. All right, so let's move on. Market formed a P wave and then broke out of the P wave. So the market was bearish. So at a bottom, if the market forms a P wave, it usually breaks to that upside. If the market forms a P wave at the top, then it usually breaks to the downside. So the market formed a P wave at the bottom. I'll show you the P wave formation. So this is the P wave formation that the market formed. All right, and then you would connect those and so forth and see how many times the market bounces. So we had this double touch here, right there, and then we had a double touch here. 1, 2. So the market made that level, then it broke out, never corrected back on it. But then as we got past, so as we got up here, I talked about this when we talked about our first session, I believe. We talked about the market correcting here because we had this distance, and I expected it to drop deeper than this. But again, what could happen at this level when you get that kind of distance? It could either drop or stay up here in range. In this case, it stayed up here in range. Tenkan-sen and Kijun-sen had to catch up, and then the market pushed higher. Then we talk about, so we never trade, we don't trade support and resistance opposite. So now we waited. This now became support, but we also have our support level of the fractal. All right, so our fractal level here now, and we already look like we're bouncing off of that level. Only problem for me is I don't really love the thick cloud here. This thick cloud is not good for me. All right, the cloud is too thick, and we're flat on span B, and then span A is starting to roll. If span A rolls, then we could probably see more downside here. But currently we're bullish, very strong bullish, but it just looks beginning to show weakness with this thick cloud. But that doesn't mean it's going to happen. I want to see structural breaks before I really say everything, because the structural break will break this level, this fractal level. All right. Structural break was here, going to the upside. Structural break to the downside here. Now we could push back. The market could push back to this level here, or else we could find support here and push higher. I want to see divergence, and I don't see that. There's not a lot of volume going on. So at this point, I don't really have an opportunity to trade the market. I could trade the market if it pushes back in here again. All right. But it pushed off of the level already. So I want to see it push back in here again for me to get an opportunity to trade it to the upside. Or if it pushes even lower, it'll push down to this point. As long as as long as I got my crossovers bullish and Chikou span stays above price and the Kijun-sen, then I'm going to continue to trade to the upside. I just want to watch out for some divergences and make sure I'm hitting my levels. All right. Let's move on. Aussie USD, weekly time frame, very bearish. If I draw this stuff out, so let's do this. Chart looks very good. Let's first find the levels here. So we're going to compare this level. We're going to see about divergence. All right. So there's going to be a level here that we're going to be concerned with. And you can see how strong it is. Look at this level. Support, resistance, 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 support, support, support. Maybe again support. All right. Because what we have here, again, we don't have divergence from this point. Now we had divergence here. See this coming up? This is going down. But I believe the divergence kicked in. Then the market pushed back to this level. At this point, I don't believe we have divergence. Let's mark it and see real quick. Divergence on the weekly. Let's see if we got it. Boom. Boom. No, negative. All right. So let's go to the daily. And first of all, let's see if we can figure out this leg. Let's see if this leg is. It already pushed up. So the third leg, the fourth leg on here, the value 4. So we're going to go to this point, quite possibly looking at the weekly. Also, let's put time analysis on this one real quick. Let's add a little time analysis on this. Just do the basic time analysis. Go to the high and move over. So maybe another week of downfall, because we see 51 here now. Like to do this basically on the daily time frame. So let's get rid of this. We already know where our level is. This is going to be our end value, this low level here. So we don't need this on the chart anymore. That's the weekly value. We can go look at the daily value. Pretty much going to be the same, because we're going to follow this end wave right here. You could see this wave. Let me mark this wave for you. We're going to see this wave and push down to this value. Actually, not that value. Well, close to that value. That's where it was. Push down to this point, quite possibly. So let's mark from this high with time analysis. and then put this on right on the 1. Okay, and then you could see no highs, nothing really lining up good here. Let's take this off and do this. Let's look at the lows. So let's go from low to low right now. Let's measure these lows. We could go from this low to this low. 28, really be 29. We're 3 days off. Could go from this low to this low. We're a couple days off there, and then we go to this low. Now let's see if we get a match, right? So 47, 40, actually be 39. So looking at 42, quite possibly another day or so, another day or two of seeing the market push a little lower. Now, before we quite possibly correct. Now, based off of the daily time frame, we have a divergence at this level. So let's look at that. So we're thinking maybe another day or two of downside move, but what could happen is we get a flat day here the next day, and then we see a move on the next day higher, which would push us up back to this Tenkan-sen level or back to the cloud. But we do have some divergence here, which is a good role at support also. So when I see divergence at support, then I start paying attention to it. This is pushing higher. These two are even. All right. So therefore, you have a divergence at these points, showing more supply coming into the market. All right. Decreasing demand. So quite possibly, seeing more demand coming into the market. All right. Decreasing supply. We had supply come into the market, but overall, between this point, we're starting to see demand come into the market. So we might see the market push up a little higher. Okay. So this downside here, we saw this supply kick in, and you could see it. But when we look at the bigger picture of the market, we see a divergence, which shows overall there's more demand coming into the market at this point. So we could see that move higher. And remember, we said maybe another day or two before we get our push, because that will take us to 42, which is Kian-Suchi, right? At Kian-Suchi, we expect Hinka B, and then maybe that's what we see. What else are we looking at here? So that's what I'm thinking. I would not, like, if I'm going to trade, if I had nothing on my chart, I would look for price action, and I would look to trade to the upside, because I'd be trading this support level. I'd be trading the support level along with the divergence, which would give me an opportunity to trade to the upside. Now with Ichimoku, I'm going to wait for the market to correct. So I'm thinking we see it correct here, and then we quite possibly get another trade to the downside here, because our weekly gave us a level. So we're thinking maybe we push eventually down to 67,432. All right, to complete that N wave leg. All right, so that's Aussie USD. CAD Swiss franc. Let's go to the weekly. Kind of like a P wave developing here also. Okay, so I'm going to put these levels on the chart. Kind of like a P wave developing. Go from here. All right, so those levels, let's go to the daily. We're kind of flat on the weekly, and we're flat on the daily. Don't love anything about the daily chart or the weekly chart. All right, but we did push off of this level pretty nice. We are in an N wave pattern. Now we found a top up here, like almost like a double top. The market dropped, corrected back to here, and maybe pushing higher. All right. We have a couple lows right here. The market made a few lower highs, but we didn't see that here. All right. So we did push down the Kijun-sen and push higher. We got a bullish crossover. Our cloud is ugly. We don't know what it's doing. You got too many crossovers here. You should never see this many crossovers in this short of a time. So therefore, I'm going to leave this market alone until it shows me something. All right. And at this point, I'm not going to mess with it. CAD Yen, almost pretty much the same. Let's go to the weekly. Actually, the weekly looks really nice. Okay, the weekly looks good, but the weekly is starting to show a 1-2-3 reversal. Let me show you why. So when you look at these legs, you're looking for an N wave to the upside. Let's mark this. This is the last N wave that we would be looking at. And we would want the market to continue. So it would have to break this level, which would be level 2, because you have 1, 2. This is level 3. So 4 should be past 2. All right. If 4 can't get past 2, which is this level here, because 2 is fluctuation anyway, then you may start to see some kind of a P wave formation that you're already starting to see. All right. So maybe we push back down to Kijinsen and then get another push higher, eventually breaking out of this structure that we have here. But not, I don't know which direction we would be thinking, but I would still think bullish, because the way we have our crossovers and the way the cloud angle is. Now we could see the market drop deeper into the cloud, but we haven't broken structure. So I would still continue with the upside move. And I'm thinking, even if we're going to fall into a P wave, we would only drop down to the Kijinsen here and then see a move to the upside. But the structure that I'm seeing right now is a 1-2-3 reversal, which would mean that downside. And the 1-2-3 reversal happens like this, because again, you had the 1, 2, 3. So you should have a 4 that pushes higher. If a 4 can't push higher and that becomes a top right here, because we got a fractal, it's now a top, you have a 1, 2, 3, and then your 4 pushes down. All right. Now 4 could stop here, and then we just start to get into like the P wave formation that I told you, and then we don't see that move push all the way to the downside, and we do maintain this trend. All right. So that's what you want to look at. You want to first follow the direction and look to see if you can find the levels based off of the structure of the market. All right. But if the structure gets broken, then how far down would the market possibly move, right? You could just say support and resistance levels, and then you could look at your 1-2-3 levels, your 1-to-1 level, and you could say, well, it might go here. So let's see where that is. Where's that 1-to-1 level? Let's figure that out. We use the tool, trend fib base extension tool. So we're saying 1. This is the low, right? 2, and then 3. So we're thinking maybe a drop down to about this point here, about 86,468. So we could see a drop down to that point, right? Let's mark that. If we're going to be a 1-to-1 move. But if we're not going to be, so that's the level. Oops, I didn't want to erase that. I wanted to erase this. So that's going to be a level where we think the market could quite possibly push. But if we're following this P wave, if it does develop into a P wave, it would be, you have 2 touches already. Then let's see what happens here. All right. And we could start to develop into a P wave already. So maybe we find support at Kijinsen, which would line us close up to this level of the P wave, because we have a leg here, have here, here. So we're inside this P wave. Maybe we find support at this area, and then the market does push higher because we are bullish. That's it. No trade right now. I would wait to see what the market does at Kijinsen or at this level here in this area, basically. So you want to look for your opportunity. You want to see what the market's doing when it gets into this area. If it pushes in here and you find nice price action, you get a push back up. It could stay here and then drop or get down to this point. But again, that's what I'm looking for in the market. And the last thing is flat Kijinsen, flat Tinkinson, flat cloud, span A, span B's pushing up, but everything's flat. So you have no momentum right now. All right. I always want to look at that. Let's push on. Let's go back. Weekly analysis. Let's go daily. CAD Yen. All right, so we have that level. Already see the P wave formation. based off of that weekly. All right, so the weekly is showing us this. So the daily is still in a P wave, I mean a N wave to the upside. We don't have a change on the daily. All right, so when we look at the daily, we got this wave right here. And it's 0.1, 0.2, and we're saying 3 here right now. Now it could break that. All right, but if that's going to be the case, if this is going to hold, we got 1, 2, 3, then we would shoot for 4. Where would the upside be on this? Because we are bullish on the weekly, but we're in a mix of a downward move, and you could see this crossover, a little thicker cloud. So that all gives us this right here. Let's clear this. Let's look for our target, quite possibly to the upside target. Then I'll show you what we'll go back to the weekly and look at something. So quite possibly, if we can hold here, we would be shooting for this level. That will give us 1-to-1 at 94,270. But say this level doesn't hold, say we drop and come down to this level right about here. All right, where this angle, where the bottom of the support is for the wave. Then we could see a 1-to-1 right about here, which would probably line you up close to this double top. So at any cost, I shoot for the double top once I get a bottom and start pushing back up, because it'll take me close to the 1-to-1 on the daily time frame, depending on where this low is. Again, if we're going to follow that weekly level, then we would push back down to this area. So that area would be, let's mark that. That area would be, here's your daily, your weekly Kijinsen. So that would be there. And we're pretty much where we want to be with that. That would be there. So let's go back to the daily. That would be right here. So that would actually take us into this area. And then we would still be bouncing on the P wave. All right. And then we would still have the same levels that we're shooting for. I hope I'm not confusing you guys. Maybe I need to be a little bit less involved with the analysis and just be a little bit more basic. Here we go with the Swiss franc yen daily time frame. Love the chart pattern. It's like very nice. You could see this N wave already. All right. So where are we looking for the market to push to? I already marked this level, but it seemed to violate this level. We're looking for it to hold here, but it seems to be violating this level, but it's not violating the structure to change the market yet. All right. Beautiful N waves, as you could see. 1, 2, 3, 4, boom. So looking for the market to push higher. It's still dropping, so we don't know where it's going to drop to. But let's see where we could drop to, and then where we could think about trading. So you're inside the TK zone right now, inside this zone. We definitely don't want to see the market drop below this level, which then would take us pretty close to the Kijinsen. So let's mark the Kijinsen and mark this as a zone. All right. So we're looking at that. Now, the other thing is the market already bounced on this fractal level, right? Let me mark that, because we could be coming back to that level. This is a weekly fractal. So the market broke, came back, bounced here, and pushed higher. Okay. Let me see something here. 10. Where would 10 be? 10 would be here. So maybe we could see something pushing out to on the 7th, that week of the 7th. Actually, this is the 21st. No, the 7th. Yeah. All right. Now let's go to the daily. To the daily. Beautiful structure still. You could see where the bottom was, pushed higher, then we came back to this level. Could still possibly see push a little bit lower. This thin cloud, I don't know. We got a crossover that's bearish. We got a flat cloud and a thinner cloud that's flat. All right, so we could see this market still drop, push down to this area here. So I don't like anything about trading it right now. I wouldn't trade the Kumo breakout would be valid, but it would only take me into this level. So what I'm saying is if it breaks out of this cloud here, you could short it because we have our 3-row reversal, which we would need, which would mean we have TK crossover, which is bearish. We have Chiku span below price, which is bearish. I need to see Chiku span break below Kijinsen to start this whole downside change. And then the next thing we would need would be for the cloud, for the price to break out of the cloud. So you would have those 3 things taking place, which would be a 3-row reversal trade to the downside, pushing it to this zone here. And then at that point, we would wait to see if the market's going to honor this level and push higher. All right. So off of the daily time frame here, we pushed back the fractal levels, right? Once already on this downward move. You always want to see, like, you want to follow the trend. So you want to find out how you could get back on that trend. You have to go to the train station. The train station are these fractal levels. For one, that's one train station. And as you see, the market left that train station right here. It left it. But it came back to pick you up right here. But you weren't ready. So train came back again to pick you up right here. And then it dropped. So now it's not at any train station. All right. And you need to catch it at the train station. There's 2 train stops that you could catch it at. So if you want to catch this train, you could either catch it at this train station or this one. Now this one's going to be a bigger one for you because it's going to be more activity at this one because it's a bigger train station because it has a zone. So this train station could possibly see this train come back to that station. If not, it already pushed on this level because see where it broke, right? So we already broke this train station. We already left this train station, then came back and picked up picked up people here. And then we dropped a little and picked up more people here and dropped. So I don't know if the train is going to come back to this station. So just be prepared. Maybe you get a ticket. You don't even have to really get your ticket yet. Just wait to see if it comes heading back this way. If you're watching the charts and you see it heading back this way, then go get your ticket for the train to be short at that point because you would want to short off of this level. Now, if it violates that level, then we're going to look definitely for this crowded train station here because this is a crowded train station. So a lot of people in here. There weren't that many people at this station, so you could see it, but it came back to that station 3 times. So we're thinking maybe it comes back to that station again. We could short or it pushes back up into this station. Then we could catch on to that train and push it down to this level. All right, now if the market's going to find support at this thin cloud, then we won't ever break this cloud and we'll continue to the upside. At that point, we'll look for this. We'll look to see what's happening at this top. All right, we'll look to see that. Now also, my N wave, let me mark this N wave off of the data. I didn't mark this like this. So yep, that N wave would take us right to this 1-to-1 level right here, as you could see. So we're still thinking, I pretty much lined it up off of the weekly, but you could see we're pretty much shooting for, because you got 1, you got 2, you got 3, and then you're shooting for 4. 4 should be around this area. Let's add a little bit of time on this. We'll do the easy time analysis. So we're saying 4 down to here. Let's just throw some time analysis on here real quick. So I'm going to take it from that high. Go here. So, and I'll show you how to do your time analysis with this tool. So actually, not really loving anything. On the 9th day, we had a little change. Nothing on these other days, pretty much. And 26 would take us way into this. So what we would be thinking is like 26 to see a 26 period off of this high, which would be a completed N wave. We would be seeing this. The market would be doing this, hitting this high and then coming down to this low, about 26 days. to get into this area. Okay. So you're about 19 days already. So another week of downside. All right. And then possibly seeing a correction. Okay. But that downside could take us to a very strong level. Okay. But then again, you could see we could get a correction before that. So those levels that I talked about are the levels you would shoot for if you get a correction before we reach this 26 period zone based off of our time analysis using Kian Suchi. All right. And that's the basic way. Very simple for you to do it that way. All right. Don't have to really know the analysis super well. It gives you a chance to learn it and still see it. Now, here's how you put these in. Go in here, change these coordinates on your fib time zone and put in, you have to put the first one as 1, then 970. So put them in here. There's what you got. All right. You could put a background color if you want. That's dark, but it would be something like this. All right. You could put a background color or whatever you want. Put labels to the right or to the bottom, whatever. I don't put the background color, but here's your numbers. Put those numbers in, and then you'll have them on your chart when you want to look for time analysis. Use highs and lows, swing highs and swing lows, basically fractal highs, fractal lows, bear and bull fractals. So at the low points, you want to mark them. So you could also go to the extreme low of the mid chart and mark everything. And based off that, you can go to the previous high or low and use that because you're looking for these numbers to line up. You can be off of any of these highs or lows. All right, here was the extreme low. Then we will go here, but I'm going to this last extreme high. And then I'm looking to see what we got from that point. All right, so let's move on. Euro Aussie, let's go to weekly, see what's going on weekly. Very flat, not a great market. Is heading into some kind of a P wave also. A lot of flat markets here. So the market just looks like it's trying to break out of this level here. Chiku span, everything's breaking higher now. So we need to be patient. So we're breaking here with Chiku span, broke price and Kijinsen. We got a crossover that's bullish with some angulation. And we have price above the cloud, and we have a future that's still dark. All right. So we want to see that future change over to bullish. That's one thing. And we'll have nothing hindering us from a long, strong move. Now, let's look at this level. It's where the market, we're looking at the market to push up to that point. Let's mark this trend line down here. See what we got going on here. We'll mark this line. All right. See if the market's going to honor that at all. So I think we could see a push up to that level. Now our N wave structure. Let's see where it looks like, what it looks like on a smaller scale. We'll go with the small scale. So let's start from this point, N wave to the upside. We didn't violate 2 really. So then the market dropped. That's a reversal, N wave reversal. So then we would be thinking if that's an N wave reversal, instead of going to the upside, the market's going to the downside, right? So we go 1, 2, 3, and then the market did go to the downside. But now we got a new wave coming in here. And this is 1. Take it to this high right now. This is the current high. Then we'd have to see a pullback and then a move up into this area. So the pullback, we have big zones. So I'm not going to mark all these zones because they're really big. I'm going to mark what I believe could be relevant zones. So this fractal level here, quite possibly see a pullback once we push a little bit higher, or even where we are, we could see a correction. All right. And then we're thinking about the market overall pushing up to about this 161,644 level. But hopefully we can get a chance to get back to here, back to this train station, and then catch that train. This is the middle of the tracks. There's no train station here. So you really don't want to be getting on the train. It just left the train station. So do you want to chase it down and get on it? I wouldn't get on a train that just left the train station. I would get on a train that has not left the train station yet. All right, so therefore I'm going to be patient on this. Also, you're flat. You're starting to see angulation, so give it a chance to see if you're going to get that momentum. Because you got a crossover, 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 crossover. That's a bad sign. You got flat market at that point. You can see a thin cloud that's not aiming, but now it's starting to angle because you got to move here. So we want to wait, see if that market's going to give you a correction. Then you could get back into the market because you'll be sure of the move to the upside based off of the correction. I mean, not the correction, the angulation, all right, of your spans and your Tenkan and Kijun. That's it. Let's move on. Euro CAD weekly. Again, this was not a P wave. This is a Y wave developing. Let's push this to this level. Now this is a Y wave. Look at the difference what a P wave and a Y wave are. So a Y wave opens up like a bullhorn. A P wave closes down. All right. So that would be the difference. So we have a Y wave here, quite possibly. We have divergence kicking into the market. You could see the divergences. This is going to the downside, but this is starting to go to the upside. So quite possibly could see a market start to push up. Let's see what the strong support and resistance levels are on this chart. Let's mark them. This is one here. We're kind of past that level. Let's not mark that. This is one. This is another. Based off of the weekly. Let's go to the daily. All right. So again, we talked about weekly divergence, right? And then if we go to daily, so weekly, we could possibly be seeing the market move higher. Daily, I actually don't have the divergence at all. Okay. But I have a flat market and I'm at a support and resistance level. Flat market, too many crossovers. We're bearish, pretty bearish, but we're starting to flatten out, right? Pretty bearish based off of my signals, Ichimoku signals, but based off of the market structure, we could be finding a bottom. Let me show you why I'm saying we're pretty bearish, because Chiku spans below price and Kijun and the cloud. Price is below the cloud. My crossover is bearish. My future is dark. That's rainy days, down days. All right. So we're seeing the market, but is this level strong? Want to see what that level, what's going to happen at that level, 141,413. So what we want to see real quick is this. If the market pushes back to this level again, will we have divergence here? All right, based on Ichimoku, we wouldn't trade it to the upside. We wouldn't be able to trade that, but we could be catching corrections off of Kijun. But at this point, I don't like anything about this chart as far as like shorting it right now. That's for sure. I would want it to push back up into the level. And we're not really trending, so I don't love marking fractal levels, because you break these levels once. You'll notice that you break fractal levels upper and lower when you're in a range or you're in some kind of consolidation. So those levels become less relevant. But when you're in a trend, they follow well. Now we just started trending here, so are we going to trend to the break? So we were flat here, then we broke up, moved higher, then we come back down. But are we flattening out here? If we're not flattening out, we'll break that low, but I want to see if the market's going to come off of this fractal. All right. And really that one got not really violated, closed a little bit higher, but big rejection, hit Kijun and then dropped to the downside. Let's see what's going to happen here, because this is going to be relevant in this area from this point to this point. At this point, I would just wait. Bearish market. Let's go to weekly. Very bearish. Now, here's what's happening on the weekly chart. Is there any support and resistance here? Let's see what the last support and resistance levels are. That's the last levels. So this is a good support and resistance level. I don't see much between there, because the next one will be here. So between that, this is the levels. You could see a rejection off of that upper level. And then finally we would be down here somewhere. So let's now go to the daily. One other thing, not too much yet. So we could still push down to 102,690, but we're starting to see too much distance, and the distance between Tenkan-sen and Kijun-sen, and price getting too far from Kijun-sen. Now your cloud getting thicker, but not quite yet rolling over. All right, rolling over would mean this span would be flat. All right, so span A would be flat. Span B would be flat. Span A would roll over. So this is span B, and span A would be rolling over. But at this point, span A is not rolling over. What span A is doing is still aiming to the downside. Span B is not even flat yet either. So we still have some more downside, and that could mean pushing down into this level. By that point, if that happens, we're getting farther from these two, with these two separating from each other. Eventually, something's got to give. What happens usually is the market could range down here or could correct down here and correct higher. Where would it correct back up to? Maybe it corrects back up to this support and resistance level, right, at 105.037, or it comes back up to this Kijun-sen level, which would be lower at this point by then. But I don't see us quite possibly coming back to this level, which is far. Okay, so I don't see that on the happening. But I mean, it could. I don't know what's going to happen. So let's go to the daily. So the daily's still quite bearish, but we did have a little bit of divergence, and the market could still push higher. But that divergence, it doesn't look like it even kicked in yet. I'm talking about this divergence right here. And that would be around right here to here. All right, a little bit higher. Even if I go from this low, you could see there's some divergence because we were up here at that point. So this is where we are. There's divergence. Divergence doesn't mean much to me unless it's at a support and resistance level. Then it means a lot to me. But until it's at a support and resistance level, I pretty much don't pay much attention to it. Whoops, let's go back here. Let's see what we got. Any trade setups. So we got a crossover that's bearish. We're angling to the downside, and we could still push to this level we talked about. So there is a trade opportunity that we want to be aware of. So we got this crossover that's bearish, and we got the divergence. We do see increasing demand coming in, but now we've zoned right here. All right, so we consolidated here. And where did we consolidate? We're inside this box, but what else is it? Where else are we? We're inside the TK zone. The TK zone is your Tenkan-sen, which is green. So this would be here. And your Kijun-sen, which is blue. You're inside that zone. Pretty much in that zone, you want to see the market break out of that zone. So that's the zone right there. So let's make the zone like this. This would be your zone. So as long as the market's in here, we really don't want much. But once it hits the top of the zone, we want to short. If it closes below the bottom of the zone, we want to short. So therefore, we're in this zone, but we're also consolidating. So usually where the market breaks consolidation is the way it pretty much goes. So if this box gets broken where a body closes below it, then we'll probably see it push back down towards this area. If it closes above it, then I don't know where it's going. Hopefully it finds resistance here and then pushes back down. But if it closed below this box, we're probably angling to this point. All right. And even if we do push back up to here, I don't see that happening like with the break of this. We'd have to break Kijun-sen, and then we'd start to see a change of direction quite possibly. All right, that's what I'm seeing with this. Let's go Euro pound using the weekly time frame first. It's very bearish. Where's levels at? What levels could we be talking about here? There's nothing to hinder us except this level. Let's make it into a zone because it has a wick. So that's the weekly support and resistance zone. You can see how well it got hit there. All right. So we're pushing into that zone with divergence at this point. We're pushing into that zone. Let's show you the divergence coming in. You could see that coming in. And you could see this still going to the downside. Now, maybe we find some support here and we get a correction. But where would our target overall be? Let's go to the daily to figure that out. So we see that divergence on the weekly. I don't like that big weekly divergence could take a while to kick in too. So let's see what we got on the daily. Really just want to get those levels off of that weekly. Now the daily had divergence here. As you could see, there was a divergence here. So let's watch this. You had a divergence here, and then the market moved higher. You had a divergence here. So you go from here, actually, and then we did have a divergence because this was higher or close or it's even. And then you had to push higher. And then now we got this little divergence, and we see what happens at this level. Also, what's happening at this level is cloud is flat on B. A is angling to the downside. Did we bounce off of this fractal level? I would have made this into a zone. So let's see what we got there and see what the market's doing. So let's mark the one level right here. And then let's mark the zone. See what the market looks like. It's honoring that zone. All right, pushed off of that zone. Also in that zone is this fractal. So that's a nice zone. You can see what happens here. Market pushed back in and then dropped. See if we have divergence here when this market bottoms out at this point. If it does, maybe it'll keep going. Who knows? You had some distance here also. Remember, see that distance? And then look what happened. You had to push higher. Now you got angulation to the downside, but Tenkan-sen is still flat, angling down with Kijun-sen. If Kijun-sen flattens out and Tenkan-sen starts aiming, we're going to see a move back up to the upside. It's not going to be like a full-blown trend move. It's something like this. All right, because the trend overall is bearish. We're not breaking that for a little bit. So do I have a trade opportunity? To me, no, not yet. You need to push back up to these levels. Our Kijun-sen. Watch for the crossover and then see what happens with the cloud then. All right, so that's what I see there. Euro yen, let's look at the weekly. No divergence as far as anything. No levels I'm really concerned with. This low. Look at this low. So I don't know if the N wave is going to continue because we need to break level 2, but my N wave is starting. My bearish N wave is intact. Let me show you. So we could look at this wave 1, 2, 3, 4. Now we just broke 2 and didn't really extend. All right, so we could be at an NT level. I'm not sure what that level would be. Let me figure it out. I'll show you what it is based off of this weekly. The NT level could be no. We're far from that. What level could this be? Let's see. Nothing. Because the N value is going to be, my N value is going to be pretty much right on it, as you could see. See, we hit right on it. Because we went 1, 2, 3, and then looking for the leg, fourth leg, because we're following this. 1, 2, 3, and then 4. We hit right on that level. This is your end value right here. So that, and it came right to the support and resistance level, what was major. So now what we're seeing is this. This is a weekly chart. So we're seeing, so we have the one end wave. So we're looking for another end wave, the continuation. It would be now to this high, and then now to this low, and then from this high. So if we're going to get another end wave move to the downside, which would be this, then we're saying this leg right here that's developed already could end down here at about 125.494. But first we need to get through level 2, which level 2 has a strong support level right here. So we could probably see the market drop to that point and to this point here. We just got a crossover on the weekly. We got a crossover that happened here and it stayed bearish. Chiku span got below price and the price hasn't broken the clouds yet. Also that low right here. Let's mark this cloud, this flat cloud. So we have that low, which is good. Mark this flat cloud. So that's a good zone for us. So let's go to the daily. On the daily, we could see the market push into that area. I don't love anything on the daily because we got crossovers, we're flat. So like as far as Ichimoku, I don't love it, but I love the level here. And I think if we push to this level, I want to see if we got divergence, and then I'd be looking to bounce off of that level to the upside. Based off of Ichimoku, like our weekly we were talking about, we could see the market push down into this area here. Okay. And then if the market gets very bearish, it could push down. Actually, where's our second level? Yeah, that would be, that's still the second leg, right? Did we mark that? Is that the second leg? We did mark it, but we deleted it, I think. Or maybe we didn't even mark it, but that's where we could see that weekly. Let's also put, oh no, we're not going to do it on the weekly. Let's go back to the daily. Get this off of the chart. So that daily level, that's the push there. So where also could we look at, let's do this. Let's put some time analysis on here real quick. So let's move this here. So maybe at about 76, we're seeing a bottom. All right. It could take about 129 to get to a low over here. I don't know if it would take that long to see hit this low here. But based off of where we see here off of the daily time frame, we could be looking at 76. So maybe about on Wednesday, quite possibly, we see a low at about 70. At about 127,614 to 127,877. So we could be looking at a low in at that point. All right. And that low would be hitting this, I believe, this level right here. But let's see. We'll see what that does. We just got a bearish crossover again. Price just broke the cloud, but the future is bright. All right. And Chiku span just broke Tenkan-sen, Kijun-sen, and price to the downside. So we got mixed signals. So therefore, Ichimoku is not really relevant for me here, but I do love the support and resistance levels. Then I do love the levels that I'm talking about for possible Hinka B. Now, also the thing I would do is, if I don't, like, I can do this analysis right here without Ichimoku, because Ichimoku just gives me levels pretty much, but I could do the analysis just like this. But I put it back on because we want to do Ichimoku. Next thing, let's go to the Euro, New Zealand dollar. Weekly. A strong push to the upside. Just crossed over. Chiku span broke Kijun-sen. This is starting to be a very strong asset to the upside. Now, there's going to be some resistance points, but this is starting to show very strong strength to the upside. So let's see where we could be looking at resistance, and possibly this is going to be big time move to the upside. We just starting to move off of this level. So pretty much now to catch this move, Maybe up into this area, we could see the market correct itself where we could catch back on, because I don't jump in long here. All right, but I do want to be long on this. But maybe we get a push up into this area before we see another correction. Let's mark this. All right, let's figure out a couple other things here. Let's see if I need to mark anything off of that. So I could mark a couple things using the weekly also. My weekly 1-to-1 level is going to be very close to the cloud level, so I'm not going to change that. All right, so I'll leave that like it is. And then let's go to the daily. So I could now mark a new 1-to-1, and I believe we just hit it because we're making a smaller wave here. We broke that 1-to-1. All right. So then overall, the big leg would be where we already just said. It would take us right to where we just said. So this is the big wave. Would take us right to where we just said off of the weekly. So the market could push up into this area before we see a correction. Now, it could correct before there, and if it does, it's depending on how far back it comes. Guys, when you get this crossover and then you get angulation, like this is good angulation. This is the best angulation right here when they're both together. When they're both together, you want to be on that trade. You want to be following that trade when they're both angling together. All right. When they're flat like that, that means no trade. When they're both flat like this, but then when they're both angling together like that, boy, that's the trade you want to be on. That's not the same thing here, but it's still a strong angulation to the upside. Let's see where we could correct, where we could possibly get into a trade. Let's mark this level. See if the market pushes back to it. Gives us a bounce. So let's see if we can push back into this level, because then we would be getting this N wave pattern right here. We'd be talking about going. Let's mark the smaller 1, 2, 3, 4, 5, and then come back and then move higher. So we're looking at something like that if we could get the pushback. All right. If not, we'll break this level, or I'm not break, but we could be pushing up to this level or maybe into this zone and then maybe drop. As long as we got the crossover that's bullish, futures bright, Chico spans above price and price is above the cloud, all signs are go. And if once we break these levels, this Euro New Zealand dollar could be a really strong runner to the upside. So based off of that weekly, we look strong after we get through these levels. All right. For this market to continue a move to the upside. Let's go to the monthly on this real quick, see what this monthly says. Monthly is just still bearish, but look at this weekly. Monthly's kind of flat, really. Look at this weekly. So weekly is just coming. It's still bearish because to me, you stay bearish no matter what until you break the cloud. So until we break the cloud, we're bearish, but it's starting to show signs of getting some very good strength to the upside. I mean, your Kumo twist just changed. You had strong divergence here, as you can see. This divergence is very strong. Had this coming down, and we had demand coming into the market. Then the market moved higher. So if this is going to continue, we'll see that happen. All right. Once you get a green bar up here, that demand has all kicked in. We need to break these levels. Once you see this, if the market could do this longer term, you see the market break, correct into this area, and then we're running. We could be running back up into these areas. All right. That's longer term. You won't get that like this week. So the weekly Euro USD, very bearish, just coming off of level, just breaking out of the TK cross. Sorry, just breaking out of the TK zone right here. Just closed below it. Very nice trend to the downside. Very bearish. Like the chart. Where's the next levels? Let's do. All right, because these levels are very hard to mark because we don't see great N waves, and looks like some of the levels are violated because you had one here and then you have here. It could come down to this point. Let's see. Actually, I'm not going to mark that. Actually, I'm going to do it like this because I'm calling this leg, right? Let's see where this leg is going to take us. 1 to 1. I'm trying to find the E value right now. I believe we're passing it. Nope, we're not. So there it is. That's the E value off of the weekly chart. So we're saying the market could come there. That's a good area. To me, the support and resistance level is here, around here, because see, you got support here and resistance here, support here. So this would be a little zone. I believe the market could push into this area. We don't have any like distance or thick cloud or anything. We have strength to the downside here. We do have some divergence here, so we could see a change of direction at this level, which would be a correction. But really, we look to see if the market will come back to these fractal levels on the weekly. Also, it doesn't matter what time frame. You mark the next one up here, you could see where we did come back to this one, right? And then we had a fractal way over here that the market didn't quite touch. But this last fractal here, we had a nice bounce. So then now we're on this fractal level. We didn't quite get there, so possibly push down to this point. All right. So let's go to the daily. We don't even have distance. We have nice angulation. Nice angulation still. Quite possibly could see that push to this level. No trade for me right now, though. Either the market gets here or it corrects, and then I take it to the downside. I'm never really trading unless it's at my levels. I'm going to mark a couple levels here because of the flat structure we have. I'm going to make this into a zone, really. Let's see if the market pushes back up into this area, and then we could short. All right, so like I would think about, because this would be your fib retracement at a 50 level. So that would be a 50 retracement. Let me show you. That would be my 50. Right? See that 50? That's where Kijinsen's going to be. 50 Kijinsen. So I already know that level. Don't need to put fibs on my chart. Just use my other fractal levels and then Tenkan-sen sometime. So I have levels that I already know. I don't need to put fibs on because always this is going to be your 50 on a 27 period move, 26 period move. All right. And we have divergence still developing on this chart. Show you that divergence real quick. See this divergence? That's going down. It's going up. If it pushes even lower and doesn't break this low, we'll see divergence down here, and this is where we definitely look to see the market push higher. Doesn't mean it will, but that would be a great level, a great area to see it push higher. At this point, I don't have a trade. We are starting to. One thing, we are at some distance. How far are we? About 150. I used to measure the distance and know which pair I can see the furthest distance that price could get from Kijinsen. And I would know that by heart, but I stopped doing it because I just stopped doing that. And I should have continued it because I would know what it would mean. And at different time frames, it would be different. So like on the daily, let's say 200 or 300 or 400, whatever it was, distance would be on a pair. Each pair would be different. So Euro might be 200 pips. Aussie CAD may be 175 pips before you start to see something happen. So I used to keep track of that. Shows you how lazy I've gotten. But yeah, we're looking to see, we have nice moves still to the downside. I still see a lot of strength to the downside. So I think that strength we could see push us into this zone here at about 106.30 to 100.084. But before we get there, if we push higher, then look to bounce off of these levels to short it to the downside, because then you'll follow what Ichimoku was showing you. But we need to push back up to get into a short trade. So at this point, I don't have an opportunity until we get to one of these levels, and I can use my price action entry, or I could use my entry off of my CMO. Pound Aussie looks very strong. This thing is beginning to push really high to the upside. There's no weakness on this chart at all. No weakness. No weakness on this bullish move. All right, so let's mark some of these levels. So this would be the high here. There's some other levels that are relevant. Let's see what this level is. We're breaking right through there. I'm going to mark this as a zone with this high. We're pushing right through that level maybe. All right, and we have N waves to the upside. The last N wave was like this. So let's see where that target is going to take us also. Let me draw the last N wave for you. The N wave that we're concerned with is this one right here. I believe we already hit the 1-to-1, so we could be seeing the market retrace a little bit. This would definitely be a good retracement level for us based off of a weekly time frame. We're going to break it down a little bit deeper. But let's see where that weekly 1-to-1 is. And it's not going to be different from the daily unless I get into I show a smaller N wave level. So 1-to-1, we're right at 1-to-1. Look where the change is taking place at the 1-to-1. All right, so quite possibly this level could hold. Then we could see a correction and then a push higher. So I'm still looking for that move higher. So let's go to the daily. And daily showing us that. So daily, we could probably, the daily, we would still find this wave here, right? And then we could possibly say that this would be a wave here. So then we would be shooting for this level also. So let's mark that level. That weekly level hit us here based off of this N wave that we would be really following structure with here. This would be that total N wave taking us right to where we are. But then I looked at this little leg here, which had a N wave here. So I looked at that, which takes us there. All right. So those are the levels that I'd be looking for the market to move to. I would not be going long right now, guys. The reason is I should be long already. So I need to wait until I can get an opportunity to get into the market. I always know where my trade setup is before that happens. So these are resistance points here. I think I am going to look for a trade if the market comes back to this level right here at about 189,818, right? So this is where I would be looking for my entry in this zone. So what I'm looking for is the market to do this. Since we're already hitting this upper level, which was that N value off of the big N wave, then we suspect maybe a correction back to this point in this area. Then we go long, at least to this point, when we catch a long opportunity here at this level after the correction. All right, but this thing looks so strong to the upside. Hopefully it does some of the things that we're talking about and gives you an opportunity to catch on, but it looks very strong. All right, that's pound Aussie. Let's go to the weekly for pound CAD. Pound CAD is flat on the weekly. Don't really love this chart on the weekly. Let's go to the daily. Daily crossover is bearish. We can't break through Kijun-sen, but we got a future that's bright. This is all Ichimoku's mixed up. It doesn't understand the market right now. Ichimoku's like, what are you doing? So therefore, I am flat too. I don't know what it's doing. And I don't have great levels that I want to really pay attention to right now. I do have some lower levels, but there's the way the market is right now, I'm not like concerned about really figuring it out to say, hey, I need to trade it. I need to figure it out. I don't need to figure it out. I need to find another asset. I look at these assets as cars, as like going to a car dealer. I have a price that I want to buy it for. And if it doesn't, then I go to the next car dealer, which is now the pound Swiss franc car dealer. So I'm at the pound Swiss franc car dealer and I ask them about the car overall, because overall this car looks like it's depreciating. Okay. And it looks like it should continue to depreciate. So maybe I could get it for a good value. Okay, well, let's see. Why do we say this car is depreciating? Well, this car has a future that's dark. This car has a crossover that's bearish, TK crossover that's bearish. This car was below the cloud, corrected back up into it, but it's been below. But this car's Chiku span is below everything except the cloud. This car is depreciating. So why should I be able to get it at a good price? Well, a good price to me would be at one of the levels, right? One of the main levels that we want to trade at. If I can't get it at my level, I'm going to do some negotiating. So what are our levels at this car dealer? So we got some prices that we could figure out about purchasing this thing. Let's get rid of this. Let me see something real quick. We're at a good level right now to purchase this car. This car, and actually we're going to figure this out on the week daily, but I don't know if I can use this big zone. But let me show you what happened. Weekly, this car is on the weekly time frame. This car has a good level right here where when I look at the blue book on this car, this is about the price that I should be purchasing it at. All right, not down here. All right, but the price is up here. So currently it's pushing into this zone, but it's got an N wave to the downside. Let's see where the target 1, 2, 3, 4. Then we said 1, 2, 3. We kind of broke, so we may be seeing a pushback. We may be getting into a 1, 2, 3 reversal. But everything is super bearish. So let's go to the daily. So on the daily, we pushed back up into that weekly zone. We're a little flat. We're starting to see some. We're still crossed over here. We did break the cloud. I mean, we did break Tinkerson-Kijinson, and we did push back to the fractal. But that took us up to the weekly zone. So we went up to the zone, pushed back here. So what we're saying now on the daily is a little bit different than what we see on the weekly. The daily saying that we could still push higher. And we could push up into this zone here. Would that change anything based off of the weekly? Probably not. Let me see. Let's go to the weekly real quick. So I just drew this line. So we're saying now the way the structure looks clean, but we do have a possible 1, 2, 3 reversal. And we did push back up. So will this zone hold? If this zone doesn't hold, we're seeing it push back up into this area. Then in that likelihood, we're flat on the weekly. All right. So let's see if it does do that. At this point, I wouldn't do anything on the daily. All right. My entry would have been down here at the zone where we pushed back and came back into the zone here. And then we could have looked for opportunity. And I'm sure last week, so where were we? The 21st. Yep. I guarantee you, if you look back last week, that I probably told you to look for a trade at this level. All right. So the session before this one, last session, I probably told you this was the level for you to look at a trade because the market was here when we did our session. And I said this would be the level we want to see if the market's going to push out of this level. So pound Swiss franc, and we pushed back up into this zone. At this point, if you're not in a trade, I just want to be patient and wait. Let's go to pound yen weekly. Pretty bullish, but starting to see some weakness here, some very strong weakness, which is the divergence. Let me show you where it's coming in from. That's pushing higher, but then we did push a little bit lower right here. So the divergence could probably start kicking in because from this point, you can see we dropped. It's showing an increase in supply, decrease in demand. That's what's starting to happen here. But we're still pretty bullish with Ichimoku. All right. And the way this looks, I'm not in love with like anything. I'm going to mark the Kijinsen level of the weekly time frame right there. I'm going to go to the daily time frame and figure it out. there's no opportunity for me. I shouldn't see too many crosses like this. I don't like anything that I see with this. Cross here, thick cloud. All right, cross, cross, cross. So we had this move here. See, I don't see anything that's relevant to me. I don't see any divergences. Now I do see a little. I'm not going to mark that because the market's not trending. Because I was going to talk about continuation divergence, but this point doesn't look like a trending market to me. So I would just not even think about that. So I don't like this market right now. Like the market's not talking to me right here. This car dealer is not talking to me, and I don't know why. So if he's not talking to me and saying the things I want to hear, he isn't saying what I want to hear. And if he is not saying what I want to hear, I have to say, bye-bye. I'm going from you to another car dealer, which would be the pound New Zealand dollar. So I go to the pound New Zealand car dealer, and I could already see he's got some beautiful cars there. But I don't know if I'm going to be able to get these cars at my price right now, because right now he wants too much for these cars. And the reason being is because I can tell you why. He's got some very nice cars on his lot. How do I know? Look at this crossover. The future is bright on his lot, and it's angling hard to the upside. He's got a crossover right here that's bullish, and it's angling hard to the upside. And his cars are above the cloud when you think about nice cars. So it's pushing to the upside. Now let's see. Let's do some analysis and see where the fair value is for this car. I really love this car. I want this car, but we got to be patient. So my wife is with me at the car dealership. Hopefully she can keep me focused, because I want to pay anything to get this car, because I really love it. And I think I can probably turn around and sell it and make a lot more money, right? But what I'm going to do is try to get it for a good price. So let's look at that high first right there. And then let's come to this big N wave off of the weekly, which is going to take us here, here, and here. N wave pushing up to this level. So let's mark that N wave at that level. What's going to be lining up at that level? The weekly Keaton's flat level here. And are we breaking this cloud yet? We're just breaking that cloud. All right, so that's the weekly time frame. Let's go to the daily. See if we can catch this thing, because this is where we're going to figure out our fair value on the weekly. On the daily. But also let's mark this zone real quick. I may delete it if it's too big, but this is a good area for the weekly to push back into for us to trade long again. That's the fair value if I look at the weekly. But when I go to the daily, the fair value is pretty much the same level, you could see. But also I want to mark a different level for fair value. I think fair value would be maybe up into this area. So I want to see the market correct back here, or else at least back to Tinkinson, because your trades are going to be when you have a strong market, it rarely closes below Tinkinson. See, look at how long it's been above Tinkinson. Let's see. Where did that happen? What date was that? What am I looking for? This is where we went above on 12/13, and we never closed below Keatonson cents. So therefore, you try to catch bounces on Tinkinson, bounces on Tinkinson, bounces on Tinkinson. I'm not so great at entering the bounces on Tinkinson. All right. Sometime I'm good at it, and sometime I'm not. It all depends the angulation. I won't catch a good trade. But that's what you should be looking for. But if it can violate Tinkinson, then you start to figure out. So when you figure out your fair value that you want to catch the market for, you say this: the most I'm going to pay for this car is right here. Because if it comes back to that level, I will pay for that level at 202.66.5. But if it doesn't, if it goes lower, and comes back, then the worst I'm going to pay is this level. The best I'm going to pay is down here. So here's my range where I'm thinking about the market value for this car. I want to see that value come into here. I want this car dealer to offer me that price between here. Between here, I will tell this car dealer, yes, I am buying your pound New Zealand dollar car. All right. But you have to clean that thing up for me. And also, I don't like those tires on it. Please give me some new tires with this thing, or else I'm not going to buy it at all. Stand firm on your trade setup that you decide, just like you would at any car dealer. You wouldn't let any car dealer swindle you. Well, I guess some people would. But you're going to go in there knowing that if you want to purchase the pound New Zealand dollar car, which is a red car with yellow wheels, black rims, it's ugly, if you ask me. But anyway, you know you want to buy that car, but you have a price you're going to buy it for. The price is here right now. This is what the car dealer is telling you he wants it for. Will you buy it? You should not buy it because your values are down here based off of your analysis of what this car costs. But if you buy it up here, then you are blowing your whole plan for purchasing that car. Well, no, you're blowing your whole trading plan. You have broken your rules. You have broken your car buying rules. The same thing. All right. So don't break your rules. Don't change your mind. If your car is what you want to get it at, or the price is what you want to purchase it at, that's what you get it for. Therefore, that means this market has to come to you. All right. But if you jump on up here and then you have to sit down through, if you have to sit through a correction, maybe you can't even withstand the correction. So that's why you want to get it at these levels. If I get it here and it only drops to here, maybe I could withstand that correction. But if I get it here and I have to wait and it drops way down to here, maybe I can't withstand that correction. So therefore, get it at your level, your value. So that's the pound New Zealand dollar, and those are the levels where I think we could catch a trade back to the upside. Overall, that pound New Zealand is going to be super strong to the upside, though. This looking like it could be a flat market. Our future is still bright. Crossover just turned bearish, sorry. And then Chiku Span's insider price might range a little bit. I wasn't suspecting the market to push back to this level, but it did. This is where I'm thinking about purchasing this market right now. So if I'm trading with my CMO, I just wait for a green candle. But price action, I can get into the market here long. Why would I get into the market here long? Until I close below the cloud, I'm going to continue the bias that I was in, bullish. It's still so from here it turned bullish right here. And it stayed bullish all the way till it closes below here. From here we turn, let's show you what I say this. Let's look at this point. We can go anywhere. We close below, we're bearish. And we stay bearish. We broke above, we don't change our mind just based yet. We're still bearish. Now we broke above with a bunch of candles. And now we have support levels to hold us from going back lower than the cloud. So let's see if those levels hold. If not, then we are pushing back towards this level. And I'll make this into a zone. So if we violate this zone and violate the cloud, we got a Kumo breakout to the downside. I wouldn't take the trade because I don't think we'd have a 1, 2, 3 reversal. All right, sorry, we wouldn't have that move to the downside based off of our TK crossover being bearish. So that would be bearish. So we would not have all 3-row reversal, I don't believe. Actually, yes, we would. I'm sorry. My bad. The 3-row reversal would give us this trade right here. If it violates this cloud, we would get our 1. Chiku Span gets below price, that would be 2. And then the 3-row reversal will be price breaking below the cloud and closing. That's where we would short it. And we would probably short it into this zone here. Now you say, why? Well, because Ichimoku is giving me a 3-row reversal. The cloud doesn't have to be changed yet. But then that just tells me probably going to see ranging if this cloud's not going to change. So then when we push down to this level, then we may start getting into a ranging market. But so you got things to look out for. You can't definitely tell what's going to happen with the market, but you look for things. So if you get price action here in this zone, then you set your price action trade for a long. All right. You could also do this. If you're afraid to take it down here, this is the best price where you want to get it. This is the worst price where you're going to get it. Then you wait for the Kumo breakout. You take the trade at the breakout. That's the worst price. All right. This is the best price in this area. But then if this area doesn't hold, then the best price to get this would be shorten it when it closes below this level, down into this area. All right. So we don't know what the market's going to do, but we have prepare ourselves for both assets of the market, but we follow the structure, and the structure right now is still bullish. The structure of the market. Ichimoku is giving me mixed signals. First of all, Chiku spans inside price, a little range. Chiku got a crossover that's bearish. Futures bright. Chiku spans, price is inside the cloud. So that's indecision. All right. Let me move on. New Zealand dollar CAD. Let's go to the weekly. Very strong to the downside. Very strong. Let's mark some levels here. This thing is super strong to the downside. It's a big zone. I'm not going to follow this zone probably on the weekly because it's probably going to be too big when I go to the daily. But this is the levels where I'm looking for the market to push back to. I'm looking for that market to push here. Let's see the N wave where the target is. I believe we probably passed the 1-to-1, which is the N value. Yep, we sure did. We passed it right here. It looked like it was going to hold and probably correct back up to here. We're pushing. All right, so I'm thinking this is the level where we could see some change. Now, on the daily time frame, let's go to that. Oh, first let's go back to weekly. Very bearish market. All right, let me show you why. Look at that future angling to the downside. It's a dark future, bearish. Look at the flatness here, and then all of a sudden the angulation to the downside. Crossover is bearish and angulation. Chiku, where price is below the cloud, and then just Chiku span here is below everything. Price broke below price and the cloud, Kijinsen and Tenkan-sen. Strength to the downside on this. All right, based off of Ichimoku. Let's go to the daily. See if we can catch this to the downside. So we're looking to trade this to the downside, though. So we could have caught it a couple times. Let me show you. First of all, I always take you back to these levels. Here's the train station right here. It didn't quite pull back to the train station. Let's mark this next train station right here. This train station had a zone, so it was a lot of people in this train station. And it kind of broke, and then we sat here and we pulled out. And then we had the next train station that we really can look at. We're going to look at two levels, two areas to get into this trade. Let's see if the market pulls back to this level, which could be our Kijinsen closer level. Or let's see if the market's going to honor this level. This is where we're going to look to trade short at one of these levels. Since we've already made a new fractal, but we're not that far from it, I'm not sure what's going to happen. We could either honor this level or come back up to this point. This is where we want to short the market. We're strong to the downside. Let's see. Let's mark the shorter term, because this is all right. So I'm going to mark this N wave. I'm going to show you how this N wave is developing. So here's the N wave right here. 1, 2, 3, and then we continue to 4, right? So now we mark a new N wave, and it's going to be 1, 2, 3, and continue to 4. Where's 4? I believe we probably hit that level. Let's see, because that'll tell us where we could see a correction, right, to this point. So we just broke it. So like we would be thinking correction here and push back up into this level here. But it looks like it's pushing a little lower. Let's see where the E value is. All right. Let's find the E value on this so that we can mark that. E value looking at about that will take us down into that zone. Right to the zone. That would be our E value. All right, so we're pretty much thinking we can push down to that level. Now, I'm not saying we're going to go straight there. That's why I'm hoping we can catch this trade, because from where we are to where we're heading, it's about 193 for a profit. But I think if we can catch it up into this area, we could be looking at anywhere from 288 to about 369 profit. All right, so we're looking for that. Now, if it continues to just continue to go down, then we're going to miss out on it. But I don't think it's going to just do that. I don't know what it's going to do. I can't tell you that for sure. But I'm looking for it to push back into those levels before getting to there. All right, but this is strong to the downside too. Very strong. I like the pair. New Zealand dollar, Swiss franc. Let's look at the weekly first. Weekly just getting very bearish. Another very bearish market. Let's see where these targets are too. And here was a bounce trade right here. Opportunity. Right? Bounced off of this fractal. So let's see where these downside targets are off of the weekly. You got a high here, a low here. Go to your next high, and where's your, oh, we're right on the level. We're right there. But the angulation is so strong, I don't believe it's gonna correct there. Could take us even lower. Let's see where the lower levels would be. Let's first mark these other levels. So let's mark the support and resistance here. That could possibly be support and resistance. And these zones also, I'm not going to mark that zone. It's big. Let's mark this level. Let's see what this level is. Let's push it up to this right there. All right, so that's a good level at about 59,531. Could see it push back down to there. Now let's see where the E value is from the weekly time frame. The E value. Again, how you find that value. So I'm concerned. I don't mind finding the E and the N value. This level is 524 pips. So we're going to drop it down from that level to down to where it would be right there. So it would be about this level here. So that would be our target there. That would be the long. So then we're going to go to the daily time frame. We're going to look for a short. So the daily, we've already had a correction. Now we're starting to see divergence. So we could be seeing a nice pushback to the upside before we get a short again. So we're starting to see that divergence. Where is it? Let me show you. But it could last. Now, divergence can last for quite a while. It could last until we get down to this level. So we could keep seeing divergence, and the market doesn't honor anything until it gets to this level. But when it gets there with divergence, then I really pay attention to it. But here's the divergence. We're down. This is aiming up. That's showing us that demand's coming into the market. We had levels where we're looking to purchase this market. And I believe we already bounced on those levels. No, not quite. So I would mark this level first. I'm not going to do daily targets because we're close to I think the next daily target takes me very close to where I'm already thinking. Because this would be the N wave right here. And it's close to where we're looking at already. So we can keep that. You could see the N wave right here. One, 2, 3, and then shooting down for those targets. But I'm not going to mark that one because I believe it's just close enough to our other target. We don't have a trade opportunity right now. And actually, if I look at CMO entry, this would be I would short today right here. All right, based off of my CMO entry. My stop loss is going to be the candle that I get into, the trade on. So I would have a stop loss like here, entry right here, and pushing down to this level here. Now, to be more precise, if I want to be precise with it, then I would take that trade to this level at about 59,708. All right, that's where I would definitely trade that to. because my first CMO entry gave me an entry on Friday. All right. And I'm bearish. Let's go to New Zealand dollar yen weekly time frame. Very bearish, I bet you. No, it's starting to become bearish. Look at the divergence on this thing. So it's starting to show increase in supply coming into this market, and now it's starting to drop. So now we had N waves to the upside. Let me show you. This is the 1, 2, 3 reversal, but because we had N waves to the upside, basically. That was an N wave to the upside. So the next wave should do the same. We shouldn't violate this level. Well, we did. So when we violated that level, then we start seeing N wave to the downside. Where could this N wave to the downside end? Or where could it go to? Where's the levels that it could shoot to? Let's see where it could go to and then mark it. So one would be, and it's still bullish, but it's showing weakness based off of the things we see. Whoops, I don't want that. We want this horizontal line. This is going to be the weekly 1-to-1 leg off of this N wave, which could take us down into this level, which is a very good level because it lines up with this fractal over here. I'm going to make that into a zone. So could see the market push into that level and then correct itself. And I still see it's very strong to the downside. I don't see no correction in place on the weekly. Now let's go to the daily. Get rid of this. We don't need this. So daily's pushing to the level that we talked about. Violating this low is a big thing. So let's mark that low because I don't have any other level for me to really push back to. Unless I'm going to push back to Keatonson. All right. So this could be our low where we correct and push back. So we're looking for the market to push back up to about 76, 119. And this area we'll get into the market short. We're pushing this thing all the way down about 73, 527. Very bearish, very bearish. Should have had an opportunity. Now, where were we last week? So here was the 24th. So I was right here talking to you guys. I don't know what I told you at that point because I knew this level was here. I probably wasn't looking for it to break. So I probably was thinking it would bounce here and push back up and then break. It didn't push up like we thought it would. Maybe it's because it's honoring this fractal level right here. I'm going to mark it into a zone. It's one that I didn't pay attention to and wouldn't have paid attention to, but it's honoring that level. I would have more so looked at this, but it's honoring this fractal right here. You could see it's right at the top of the fractal level, and then it dropped. So now where's it going to honor? All right. So I don't see it really pushing back much higher, especially not higher than that level. So we would keep that on our chart, but let's see how far below this level it drops, because that's where I would look for the correction. Corrections can happen quickly that same day, and then it drops. So watch for that. And that's where I would short the market with New Zealand dollar yen. Very bearish on New Zealand dollar USD. Very bearish. Very, very bearish. All right. And we've already violated levels maybe. Let me see. Let me mark some support and resistance on this weekly. Definitely going to mark that. Going to definitely look at this level. So let's look at this level. And then let's look at where this overall could go weekly with this N wave, because this is a new bearish N wave. Not a new, it's the new leg of the third leg of the N wave. So that N wave weekly is going to be here. That N value. It's because we're looking at this wave right here. 1, 2, 3, and we're looking for the continuation to where it's going to end is down there. So we could see it drop to that point. All right. Or quite possibly this support and resistance level. Now let's take this off the chart. We don't need this anymore. Let's go to the daily. Daily's pushing right there. Daily's still angling hard to the downside. And it doesn't have divergence. and I don't see how or when it's going to correct. Let's do this. Let's mark this level as a zone. Quite possibly pushing there, but I don't know. We are getting distance, but we're not showing flatness yet. We're still angling with this thing. Everything's angling. Very strong to the downside. I can't jump in here because like this is a car dealer that has a beautiful car, but the price is out of my price range. It's not where I want to buy it. So I need to wait till it gets to where I want to buy it. It will get to where I want to buy it eventually. Let me see here. No divergence. And see what's happening here is this. So we had this N wave here. Now I'm showing you the smaller set because there is a bigger wave that's still bearish. This is the bigger wave. All right, so that's the big wave, but I'm showing you wave within waves. So within that big wave is this wave. 1, 2, 3, 4. You had this N wave right here, right? But that N wave barely just broke level 2. So it was still a good N wave, right? Because it broke up, it was up here. But in order for that N wave to start a new N wave, because you start from the low point, you go high, low, high, right? So go to the next low point. You go low, high, low. And it shouldn't violate this level right here. Well, it's well violated that level, way past that level. All right, so now we have to figure out the next wave. It's going to be a bearish wave, so it's going down. We haven't gotten this yet to figure out where this will be. We need to get this. Well, where could that happen? It could start here and move up to this area, or back to Tenkan-sen, or back to Kijun-sen. Remember, I told you a strong trend. The market's only going to correct up back to Tenkan-sen. And that's where you would look for a trade. Like, see this, once this market dropped here, it never traded back to any levels that we would look for, and we would never catch a trade in this area. And it didn't bounce off of Tenkan-sen either until here. And that gave you a little bit of a trade. All right. Now, overall, the market does give us our levels if we look at it. Let me show you these fractal levels that the market pays attention to. When we were here, they broke and came back to that level and dropped. See that fractal, and we came back to it and we dropped. So that's why I'm looking to come back to some of these levels, but I don't know where it is yet. So I'll be patient and wait for the correction. Usually I can tell you where my trade is. I'm telling you it could be here, but I don't know if it's going to come back there. So that right now where we are here, this is where I would trade the market short. I already know where I want to trade it short, and I already know where my stop loss will be above the zone. Okay. USD CAD. Let's go to weekly. I already know I'm not going to be talking about this thing too much. This thing is starting to show possible signs of moving. It needs to break this level, really. Okay. But it's starting to show signs that it could start moving. All right. I don't have any structure that I want to mark. 1, 2, 3, 4. We failed to break, so we're inside this. So 1, 2, 3. And then if we break, so if we break this red level, then we're looking at this thing pushing up to this point. At least up to this area, about 131, 330. Okay. So let's go to the next. And also that would push us up into this fractal, but we're becoming bullish because we got a future that turned bright. Let me show you. So we're starting to see signs of bullishness. Futures bright, crossovers bullish, price above cloud, Chiku span above price, and Kijun-sen. So that's starting to become very bullish. We just broke the cloud. That's a Kumo breakout. You could take that trade right now as a Kumo breakout off of a weekly. Now that's the weekly time frame. So I wouldn't do it. If I'm an investor, I'd probably do it. So looking at the daily is going to give me a different picture because of the structure. So based off of the daily, Ichimoku is flat, and there's no good setups for me right now. And the reason being, what I'm waiting for is this now, based off the everything we looked at. Crossover, 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 flat, crossover, crossover. All right, too many crossovers, so we're flat. I want to see the market break this level and then come back, and then we'll trade, which would then start to line up what we're starting to see on the day, on the weekly. So at this point, I don't have anything. At this point, I just wait based off of Ichimoku. Okay, so I just wait, and I can show you the weekly starting to become bullish, but still, it's not until we break this level, right? Same thing, but we're starting to see signs based off of what I just showed you, based off of Ichimoku. But based off of price action, based off of price structure, we need to get through this level for structure, and then we'll see the trend. USD Swiss franc weekly time frame, again starting to move higher, but it needs to break some levels to start showing that this is trending. Otherwise, it's going to be a flat range. All right, so let's go to the daily. Daily's very flat. To me, it needs to break these levels. You could see there's too many crossovers with Ichimoku. Crossover, crossover, flat cloud. Nothing good here. You just have some support and resistance levels. You could trade these upper levels of support and resistance. All right, upper and lower levels. But other than that, based off of Ichimoku, I would just not bother it. The Yuan, I don't do a lot with the Yuan. I haven't traded it much, but it's very bearish, but starting to see some divergence. You could see that divergence, right? Divergence coming into the market, as this is pretty much the same maybe, but this is going higher. But everything on Ichimoku is still bearish. We got angulation, Chiku spans below price is below the cloud. We got kind of angulation, and we got a dark future. So everything's bearish on the cloud off of the weekly time frame. Let's go to the daily. The daily is still bearish. It's pushed up to a level. What I would look for is to short this based off of price action right here. We don't have any divergence. I would look to short this, and I would look to shoot at this level, get to this level. I'd look for price to bring us back to a short down to this area here at about 6.30184. Right, so that's the daily time frame. We're going to delete this. The reason we're saying is because everything on Ichimoku is bearish. Right, everything's bearish. So what we want to see now, we see price action at this cloud level. Our fractal level kind of is like the best fractal that I would mark would be, because I don't see any in here. So this is the last one. And then we're at this level, we're starting to see, let's mark that. That's not level. Let's mark that. That's the level we want to mark. So let's mark this into a zone. That's a zone right there. We're off of this level. All right, so we're bouncing on that level. What I want to see, we already got price action. I usually walk these zones. I'm not going to explain that today, but because I'm really running on time. But we already showed indecision here. I don't like to take the trade this far away to wait for indecision to be true. I got crossover that's bearish. My future is dark. Chiku span is below price, and price is below the cloud. Everything is bearish on Ichimoku. Therefore, I should take the trade at this level. I should short this trade right here and stop loss like above here a little bit. Now, if you don't take the trade at that time and the market pushes in here more, when the market pushes midway, then put your entry here for sure. If the market pushes all the way up here, put your entry in the middle then, and still keep your stop loss the same. All right, and then we're shooting down for that level that we talked about already. What's that level we're shooting for? 6.30192. All right. I'm not saying we definitely get there. We definitely have to get past this 2 level. All right, you got a 1, a 2, a 3, and you're looking for 4 to be down here. It might be here because you need to get through that 2. And then again, it might be here, and the market goes the other way. Let's go USDJPY. Let's go weekly. Weekly is very, very bullish. Just closed outside the TK zone. Here's your TK zone. Look at that. Here's your Tinkinson up top, your Keatonson on the bottom. We were inside the TK zone. We closed above. That's a good long trade right now based off of this. Now we're starting to see some divergence. All right. So here's the weekly divergence starting to come in. From this point, we were going higher. So that's showing supply coming into the market, demand starting to weaken. So quite possibly going to see the market drop, but we could push back up into these upper levels. All right. So let's see what we have happening. Let's go to the week daily. So I'm going to get rid of that. All right. So maybe we bounce on this level. We got a crossover that's bearish. Futures bright, but it's flat. Sequence spans above price. We need to see if this level will hold us. If this level can hold, we push back down to here, then we could push back higher. All right, that'll give us a 1, 2, 3 reversal if we push back down into this leg. All right. That's what I'm looking for with this. But again, the weekly is bullish and not showing any weakness. So this daily, maybe we push back into this little area here, and then we could get a long opportunity. That's what I would be looking for. Let's see what your daily target would be. Here's your N wave. See it? So let's see where the completion. So here's your 1, 2, and your 3. So we would be pushing up for about 117. Right up into this area for our long opportunity. If we can catch it here, push up to that area. This is a good sign also. Let me show you. I don't know if it's fully kicked in, but here's divergence on this. There's hidden bullish divergence that kicked in. A bullish trend to the upside. So there's two types of divergence. Regular divergence, which means reversal divergence, and hidden divergence, which is continuation divergence. Let me show you what it is. See this level? That's this level. See this level? That's this level. On this chart, this one is higher. This one right here is higher, right, than this one. But on this cumulative volume oscillator, this one is lower, not higher, than this one. Therefore, that's hidden bearish divergence, hidden bullish divergence, meaning we should see the market push higher. And it did. It pushed higher already. And now we're thinking maybe correction and continue higher. And we could get to this level with our trade. That's what I'm looking at. And I think that's your opportunity there. Wait to see what happens with the price. That divergence kicked in already because that's the move there. But we're still going to continue to see upside, I do believe, based off of everything that we see on Ichimoku and so forth. And when I say I do believe, it's not based off of my beliefs or what I'm thinking. It's based off of the analysis of the chart. All right. I never can tell you just look at a chart and say, well, I believe this. I can't tell you that. But I'll tell you what I believe based off of the analysis, but never based off of my thought. So that's USDJPY. I do like that. Mexican peso, I'm not going to get into this one really. I don't really trade this. And it's kind of flat on a weekly. The daily is getting a correction after a big thick cloud. See, always find a bottom with a big thick cloud, and you got angular distance with Tinks and Keatons. And with a thick cloud, you're always going to find a bottom or a top. So that already showed that. I'm not going to talk about that one. The Kron, I don't trade it. I traded it a little bit here and there. It's becoming very bullish though. And it started a new wave. I'm going to talk about it because it's starting a new move to the upside. This is bullish. Very bullish here with a future that's bright. Price broke above the cloud, which is bright. So let's mark all your signals. Bright, future. All right. That's bullish. All right. TK crossover, bullish. Chiku span just getting out of price, bullish. Price closed above the cloud, bullish. All bullish signs. Therefore, this weekly is very strong. So therefore, it's showing an N wave already. 1, 2, 3, 4. That was your first N wave. Then you had another N wave develop. 1, 2, 3, and we're in the middle of it. We always need to get through 2, but let's see where the 4th level is on this thing. 1, 2. So we could push up, a nice push up into this area here. 1 to 1. Does it line up with anything? Yes, this support and resistance level right here. So that's a nice level to push up to. Right up into that level there. Longer term weekly time frame. So let's go. Whoa, what did I do? I didn't want to delete that. I wanted to delete this. Let's go to the daily. So that N wave started from here down here, push back up, and we're thinking up to there. We'll get a cloud breakout, crossover, future still dark. So we still have some mixed signals here, but if you close above the cloud, you do have a 3-row reversal because you do have your TK crossover bullish, you do have Chiku span above price, and then you will have a breakout of the cloud. That would be a Kumo breakout, a 1, 2, 3 reversal breakout. All right, which would take us at least up to this level on a Kumo breakout. That's a Kumo breakout trade if the market closes above this level. But then overall, if we could get into a trade, we're looking to trade up into this level here, about 959,585. That's what we would be looking for. Now let's talk about how could we get into the trade. Maybe we're late, but we would look to bounce off of this level, and it looked like it's trying to do that already. So we may have missed this train. I'm not sure. We're sitting on it now. I liked it to push back into the level a little bit more. Give me a little entry, but you could see we got a rejection here. So if we can't get that, we could look at the close above the cloud, which would also give us a close above this price action, which is this indecision candle rejection. So a close above that would surely be it. But if it could push back into this zone a little bit, I would go long at that point. So good opportunity there with the Kron. Looking at BTC USD, no. We already looked at that yesterday. Look at the video yesterday for XRP2. So oil, yes, we're going to look at that. Let's go to the weekly time frame. Oil. Nice push on oil. Let's get rid of this because we already hit that level. Broke well above that. I didn't take it off. So let's mark this. 1, 2, 3. We're already at that level. So we may correct a little bit. So let's see where we are daily wise. So the correction could be coming. You got some divergence here. And it's just a correction to get back into the move upwards because you got a little bit of divergence here as this is still pushing higher. So, and we're staying above Tenkan-sen. So we want to see it break back inside that level and we could get it to bounce off of this point. But maybe it comes all the way back down to this low. I don't think so. I don't know. I can't say. So let's get rid of that. So let's think about where could we enter this? Because I'm thinking we're going to see a little bit of a correction. Maybe it only corrects the Tenkan-sen and we look for a bounce there. All right, but where else could it bounce? Let's see where these levels are. So maybe it pushes back into this area, which would be Tenkan-sen. If it violates this level, then we see it push back to Kijun-sen, which then I might think we could push down to this level here. All right, which would be lining up with this fractal. We probably break that a little bit because we would be aiming for Kijun-sen. So this would be the area where I look to trade this long. The cloud's getting a little thick. I want to see a little bit more angulation. It's getting thick because we probably got a top and we're going to correct a little bit. Then we could see it push higher. then you'll get the angulation on the cloud. We still have angulation on Kijinsen, and Tenkan-sen is starting to roll a little bit. All right, your cloud is still angling strong, so it's a strong bullish market with oil. But I think it's about ready to get a little correction. We could never tell when the market's going to correct. Looking at silver, let's go to the weekly. It's a flat market. It's got some support and resistance levels, which would be actually market there. And I'm going to make it into a zone, which would give me this level. That's the zone on the weekly. It's kind of bearish on the weekly, but kind of flat also. So let's go to the daily. Daily's having a hard time getting through this level, so bounces off of this level down here are what I would think. Ichimoku's not great right now because you got too many crossovers. And I'm seeing no divergence right yet. Let's see what happens here. I don't like what it's showing me on Ichimoku basically. So therefore I looked for the market to come down into this zone a little more. And somewhere in here you could bounce off of these levels and trade long. Don't love Ichimoku on gold. I'm sorry, silver. On gold now, last one. Very flat market again. We're trading inside of a candle, a weekly candle right here. Pretty much inside that weekly candle. Okay. So I could delete that. No structure that I really want to pay much attention to. So daily wise, again, I'm not in love with this thing. Structure wise, we just broke, but we still have angulation, but it's bearish, hanging to the downside. Chiku span just broke price, getting ready to have a crossover. So let's see this. So we could see gold push back up into this zone here, back up into this area. Watch for gold to push back up into this area. If gold pushes back up into this area, see if it cannot violate this level. If it doesn't, we're going to see gold drop back to the downside. All right. But other than that, gold is slightly bullish, slightly bearish based off the Ichimoku. It's mixed signals. All right. Because I'm still bright here. But everything else is, and this is just crossing over. So we got two signals bullish, two bearish. This one's becoming bearish. That's why I say we may be correct. And then drop again, we'll get a changeover. And everything will be bearish. And you'll see gold probably drop off a little more, even more. Where could it drop to? Well, it depends on where it corrects. Let's say it corrects back up into that zone I'm talking about, from here to here. Then we're looking at that level I just drew on the chart with this support and resistance level. That would be the perfect level for us to trade to. All right, so we're going to look here to short. But that's the markets. That's what I'm showing you. That's what I believe could happen based off of Ichimoku. My goodness, this stuff is crazy. But it takes a lot of time to really talk about the market. So hopefully you guys are enjoying it. And it also takes time to learn that stuff. I spend a lot of time on charts. I'm not even going to tell you guys how much time I spend on charts right now because it's ridiculous. But I actually spend about a good 12 hours on charts most of the time. And it's not sitting on a chart looking for trades. It's sitting on a chart looking at the market structure, understanding what's happening, seeing any kind of signs that I can continually see. As far as like, that's how I learned about looking at the cloud and could see that I find a top and a bottom based off of the thickness of the cloud. All right. Looking to see how divergences look. How does the market react at divergence when there's levels? Looking to understand support and resistance levels better. Looking to see the structure. Looking to see chart patterns. All that stuff. Looking to see if the market continue. This is how I just started realizing the market really bounces on these fractals quite often by just going back, reviewing the market. That's what you need to do. Spend time with the charts and learn and understand the charts. And then you'll know the market, and then you could do anything. You could put anything on your chart and know the market, what the market may do. And that's what it may do based off of just learning and understanding structure. But the market could do whatever it wants to do. But it may do what you're figuring out based off analysis. All right, guys, hope this is helping you. Until next time, God bless. So long.